Hi everyone, it's Wednesday, March 6th. This is Liam McMahon. I'm a currency strategist over at globalfxclub.com, and I'm here today to do a brief video analysis of Kiwi dollar. We're going to look at the daily chart, talk about why this has been a difficult pair to trade of late, look at some information that may save you some pain in the future, and a look at a potential longer term setup that may hopefully be developing in Kiwi dollar. It may help us actually get a little bit more tradable environment with that pair. So please take a moment to pause the recording and read the risk disclaimer, and then we'll get started. All right. So here we have the daily chart of Kiwi dollar with our now fully developed channel. You can see we have a touch here and a touch here, and then a touch here and a touch here. So a very clean sort of range that we've been trading in for since September of 2012. You can see that the pair has been sort of fluctuating between these two extremes with lots and lots and lots of choppy price action in between. We've really only had from the 16th of November of last year through the 14th of December, we had a nice clean uptrend. And from that top right around the 14th of December down to the 26th of December, we had a nice clean downtrend. Other than that, you can see lots of choppiness, lots of challenging trades. We finally got a nice clean breakdown here out of this range back on the 25th or so of February. We broke down. It looked like we should finally start redeveloping some sort of bearish trend, and then the market 180'd. And you can look, and it 180'd right off this 200-day EMA in orange. So this is the 200, this is the 100, and this is the 50. You can see the 50 was holding up price. It finally broke. It went right through the 100, hit that 200, and just turned right back around. You can see the 200-day EMA was also supportive back here on the other major drop, on one of the other major drops that we've had in the pair recently. Back here on the 16th or so of November of last year. So that it sort of behooves you as a trader to always keep 200-day EMAs on your charts. No matter what time frame you're looking at, it's always good to be aware of when a 200-day EMA is coming into play. Here we popped below it briefly. We finished on a major daily candle up off that 200-day. We've extended gains from there. Now we're testing the bottom of this 50-day EMA, which, as I pointed out before, has been significant in the past. It was significant here. It was significant back here. When it was significant here from the 28th of January of this year through basically the 12th of February. So you want to keep an eye now on price action here. A close back above this 50-day EMA would seem to expose a move back up towards the top of the channel around 85.50, whereas a move lower and finally, eventually what we need is a close below this 200-day EMA, a daily close below, not just a brief trip below, and a daily close below this channel, so call it below 82, should open up a move lower, roughly the equidistant to the range, which gives us about 79, a little bit below 79. So that's what we're looking for here. The market seems to be, and it's also, possible that the market's going to continue to play this range between the 50 and 200 EMAs for a while before eventually making its break. Personally, I will not be looking to probably trade that as a range. I would rather wait for a move above or below, just because you can see that this choppiness with dips below would sort of make it challenging to trade. My ideal scenario is a move outside of this range and hopefully to start a new bearish trend, just because I feel like that is the best trending opportunity would be a move lower and a break of this 200-day EMA. So that's what we're keeping an eye on. Always good to have that 200-day EMA on your chart, and definitely keep an eye out on it to see if we can finally close below it sometime in the coming weeks. Good luck the rest of the week. Remember, we have some major event risk, starting with the Bank of Canada today. Thursday brings the Bank of England, the European Central Bank. Friday, of course, brings non-farm payrolls. And tonight we also have the Bank of Japan. So lots going on, lots of volatility expected, so be careful and look for good opportunities. If you have any questions, head on over to globalfxclub.com. We'll be happy to answer them, and I look forward to talking to you guys again soon.